Good morning, nearly afternoon, everyone. It's Ben Laporte from OFA here. I'm going to be the host for the webinar today. We're going to give it a few more minutes, probably 3 or 4 minutes for more people to arrive. It's 11:58 by my clock, just turned 11:59. So we'll give it 3 or 4 minutes before we get going. Just want to, well, no, and I'll do the housekeeping items when everyone's here. So you'll hear back from me in 2 to 3 minutes. Okay, I see we still have people trickling in, which is great. We're almost ready to get going. We're just gonna have a little bit more time for more folks to log on here. Okay, so while folks are still logging on, let me just get a few housekeeping items out of the way. We are using the GoToWebinar function, so you'll see there's a few different tabs here on the side. We will be doing questions, and one of the big points of this is for the opportunity to have questions. You'll see a chat window and a questions window. Feel free to use the chat window, but if you have questions that you would like to have answered, put them into the questions window, either now or throughout any point of the presentation, and we'll address the questions at the end of the presentation. So again, use the questions window to have your questions answered. And we want to remind you as well that case-specific questions are going to be redirected back to your insurance provider, right? So if you have, if you're wanting to work out a really specific issue you've been having with your insurance, our presenters here are going to be discussing kind of generally how to handle different stuff, but we won't be here to iron out specific problems that individuals are having. We're here more as an informational session for the industry. So we are at 12:02. Just see we crossed over at 200 attendees, phenomenal. So welcome everyone. My name is Ben Laporte. I'm a senior policy analyst with the OFA. I do want to just do a quick disclosure before we begin that OFA does have kind of financial business relationship with Cooperators. We are a owner operator of Cooperators Insurance, just so that everyone is aware of that relationship between OFA and Cooperators. And Cooperators obviously is a valued member team, part of our member benefits program as well. So just to get that bit out of the way, we are very happy to have with us today Ben Eastman from Cooperators, who is a senior consultant on the National Farm portfolio. Ben was raised on a cash crop and dairy operation, which does still operate in the Ottawa area. The family operation holds memberships both in OFA and Gailey. Ben currently resides in Bowmanville, Ontario, with his wife and 2 daughters. And we also have with us from Cooperators, Mark Walmsley, who is a farm underwriter manager with Cooperators. And Mark has been with the Cooperators for over 30 years. And he holds the National Farm Underwriting Manager. Although presently residing in Calgary, he was raised in Frontenac County near Kingston. Prior to being the underwriting farm manager, Mark held several roles within Cooperators, including the commercial underwriting claims and managing sales staff. So a little bit about what we're hoping to do today. So the purpose of this session is to assist OFA members to help understand what's happening in farm insurance market. So we have been getting lots of questions and concerns and issues over the last year or so about farm property insurance. So we are very happy to have 2 experts with us from Cooperators today to give us a lay of the land. So how it's going to work here, I'm going to hand it over to Ben and Mark in a second, and they're going to do about a 20-minute presentation, and then we're going to have a chance for questions at the end. So if you didn't hear me at the beginning, if you have questions, put them in the questions window, not the chat. You can use the chat if you like, but questions will only be answered from the questions window. So without further ado, I will send it over to Ben Eastman. Ben, thank you so much for joining us today.
Thanks, Ben. Good morning or good afternoon, everyone. Thanks for joining us today. We're gonna move through this presentation. I'm Ben Eastman, Senior Consultant Farm for the National Farm Portfolio for the Cooperators. Joining me today is Mark Walmsley. And Mark is our, sorry folks, as this thing slides through, Mark Walmsley is our farm underwriting manager, overseeing our underwriting teams, their production and some of the product facilitation that they do as well. We're going to discuss today, as Ben mentioned, we're going to discuss kind of what's going on in the market, what's happening, what are we seeing. We're looking forward to answering some questions. You'll note that the 20-minute run time for this presentation may be a little bit light in time. We wanted to give you guys some value-add material, some information, but also allow the membership to ask some questions. Ben alluded to the relationship with the OFA and the Cooperators. We're big advocates for the Ontario Federation of Agriculture and all the things that they do for the agricultural community. So thanks for having us here today, folks, and we do appreciate your time, and hopefully we will be able to answer the majority of your questions. Any of those case-by-case specific ones, or the I'm having a challenge or I need more clarification, we will direct you back to your insurance professional to have those conversations, but there could be a general conversation to have as well. So we'll try and flesh those out and answer as much as we can. But I'll turn it over to Mark, and he's going to walk you through the basics of insurance. Mark, you want to take it away?
Thanks, Ben. So I want to talk initially just some about the basics of insurance, maybe to level set a bunch of people. So just so people know, at the beginning of the year, the insurers have a rough idea of how much they're going to pay out in claims, and therefore how much overall premium they'll be required to pay for these claims. And while only a few of the farmers will have a loss, it's going to require the premium of everyone to pay for these claims. As a result, the insurers use a number of factors to determine what the individual premium will be for everyone. So this could be from everything from what's the operation or what type of farm it is, to what are the individual attributes of your particular farm. It might be how many structures there are, age of certain things. There's various factors that come in there to determine the specific premium itself. Then what we're trying to do is what we call the principle of indemnity. So after the loss itself, the insurers are trying to put you back into the same financial position that you were before the loss. And really that's what insurance is trying to do. Now, insurance, farm insurance has been a struggle from a profitability aspect for many years for a number of insurers. And this is maybe why if you're getting it there, the insurers are coming to ask you for specific information to do on this. So they may want to know age of electrical systems, for example, in barns, those kind of things. They want to know, is it being proactively replaced and updated on a regular basis? Or, it's kind of good enough and we haven't had any problems with it, so we're going to continue on with it as it has been in the past. And we've done that for a number of years where it hasn't really broken down. Well, the insurers, they're looking for the person that's updating and where it needs to be, updating their systems, being on top of it, have good risk management practices on there. So your broker is probably more likely to come out there. They're doing more reviews. They want to do that relationship. They want to know the maintenance of it. But it's a very specialized product in there. So quite frankly, there's less insurers getting into this market because it is very much a niche market. And the problem is when we're getting few insurers, it does create fewer opportunities for you. In Ontario, we do have the bit of the advantages. There's a number of also farm mutuals. So they have far more farm mutuals than other provinces. So it does give some options for you on that. But it is a very niche, so there requires quite a bit of understanding of how the market works for that. Ben, can you go to the next slide for me? So, oops, I got a problem at my end. Okay. So are all insurance policies the same? Quite frankly, the answer is no for that. So different coverages have different costs. For a lot of people don't realize we've got up here like snow load and sewer backup. Those are actually not part of the policy and actually excluded, but can be written back into the policy. So you may want to look at there, if you have a large structure, do you have snow load coverage on there? Same for your dwelling. So we're talking about your home there. Sewer backup is not part of the policy. However, that can come back. You can write that back into your policy to get coverage for that. And sewer backup coverages or sewer backup claims are very expensive. Business interruption, we're seeing more on that. There's different types of business interruption. Some provide a limit, so maybe a percentage of the property or the structure you have. Some don't provide any limit at all, so it may provide coverage for how long is it going to take to. They might have what we call an indemnity period. So the length of time it takes to get the business up and going. So it might be, 18 months or 2 months, or some have up to 3 months. But in this time during COVID, we're noticing a lot of, as everybody has supply chain issues. Some of this equipment may need to come from Holland, for example. The other issue is the contractors. Sometimes it's tough to get that specialized contractor to build some of those specialized barns. It can be 2 years till you're up and going fully on that. While you're doing there, your profits or there's different forms in there, but it's pretty well your income obviously is being disrupted. So the policy will then pay for that. So there's different forms in that. So you may want to talk to your broker or your financial advisor. Are there limits on there for business interruption or not? And do you have a big enough, again, the indemnity period for how long it's going to take to rebuild that barn or your farm? Now the coverage levels, a couple of factors to keep in mind. Typically on here we see a couple of different main types. We see what we call named perils. So a peril would be aspects that cause a loss. We're talking like fire, lightning, smoke, theft. Those are all perils. So you can get what we call a named perils policy. So typically there's usually about 12 perils that they would cover. So if your loss happens to be one of those perils, again, that's like fire, smoke, lightning, theft, if it's one of those perils, then you should have coverage. The other type of coverage we often see is what we call an all risk, where it covers for all losses except for some exclusions. So there'll be some exclusions on there. So, nuclear is an exclusion, for example, to do on there, but there can be a variety of different exclusions on there. So the all risk policies, they will be more expensive, but they provide you a greater range of coverage for that. So that's something to look out for as well. So on the market itself, where it's going, we're seeing larger losses in Ontario for that. So when we say the larger losses, we often mean larger barns that are sustaining fires. So as you can imagine, if you get a large, let's say it's a dairy barn that goes down. So in the barn itself, maybe it's $4 million for the barn, plus you may have lost the herd in there. Then there's the business interruption where it needs to be. So it could be many millions of dollars for that. And obviously then we need to go out to all our insureds, so that'd be the farmers in this case, to try to, how do we get enough premium to pay for all these things? But the barns are tending to be becoming bigger, more sophisticated, as you know, which obviously has a tendency to lead to larger losses for an insurer. And from an underwriting aspect, and just so what underwriters are, just so you're aware of, an underwriter looks at it and first decides, do I want to accept this risk? Is a good enough class of risk that I want to accept on our books? And then secondly, how much premium do I want to, do I need for this particular loss? But for claims, they're looking at, there's two elements. There's claims frequency and claims severity. So the claims frequency is how often is an insured having claims. And the claim severity is how big are these losses. So insurers, most of them recognize, because they do a lot of analysis on the data. Claimants with high claims frequency, in other words, they have lots of claims, even if they're smaller, it has a tendency to lead to high severity. So in other words, a big loss. So if a person has a bunch of smaller losses of 2, 3, 4,000, they do get somewhat, they'll take that into account. And I don't know if concern's the right word, but they take that into account because they're looking at it later going, is there potential? Are we looking at the likelihood? It's more likely we're going to get the $500, the $1 million loss to on that. So my word of advice on that is for claims. If you have that 2, 3, maybe 4,000, it depends on the size of your farm, maybe talk to your broker. Although it may be covered under your policy, talk to them and say, is it worth putting this in? Because really insurance is there to protect the big financial loss for a farmer, any businessman actually, to do on that. It's to protect that big loss. So if you have some smaller losses, again, although it may be covered under the policy, it may or may not make sense to put that claim in. So I would talk to your broker on there, have that conversation. Look, I've just had this, whatever that the claim may be. Maybe you clip the side of the barn with your tractor and you cause some damage, something like that. Is it worth putting this in, or should I pay for it myself? The other thing you can do for premium are deductibles. So if we're not putting in the smaller claim, the higher the deductible, so that would be the amount that you need to pay in the event of the claim, the higher the deductible, the lower your overall premium is going to be. So, sometimes we see these ones and people have, the $5,000 or sometimes $1,500 deductibles, especially if you have a large structure. You wouldn't want to put a claim in that small anyway. So maybe it makes sense to have and it depends on your risk tolerance and those kind of things, but maybe it makes sense to have a 5, 10, we see some, $50,000 deductibles, for example, to do on that, and that will bring down the your premium, and it can have quite a big impact for that. So to do on there. Okay, I'll put it back to you, Ben.
Thanks. Thanks, Mark. So just to elaborate on some of the things that Mark's spoken to, folks, the farm insurance and insurance in general it can be confusing. We can appreciate that as, stewards of agriculture and feeders of the country and all the other things that you provide for society, that there might not be the opportunity to get as in depth into your policies, the conditions. Mark alluded to some of the way that the policy is built, the coverages that you have today, the coverages that you perhaps don't have today. We'd always encourage a regular review process with your insurance professional, whether that's a broker, an agent, whoever that looks like to you and your farm. Having that regular review, whether it's every year, every other year, whatever works for you in your operation, it's important. Especially Mark mentioned some of the challenges we've seen with COVID as well, just with price changes, supply chain fractures, availability of contractors. The cost of everything has gone up. It's important to have that cost properly stated on your policy, understanding what that new combine is insured for, what's it covered for, what's the deductible if I have a rock go through the header, what happens if I have a lightning strike to my barn and it burns down, and you're one of those farms where you need your barn to generate an income. You have a dairy, a poultry, a hog operation. There could be a substantial impact to your income. That's a disruption. It's a disruption I hope none of you ever have, but it is a disruption. It's a massive challenge and something to work through, but it becomes even more challenging if the proper insurance isn't in place to facilitate the reconstruction, to pay those bills, to help support you and your family through that challenging time. Having those reviews gives you the opportunity to ask questions, seek clarification, go through those limits, pull at coverages. It also helps your broker and your provider understand, what are you doing? What else are you doing? What else are you working on? What kind of management are you implementing at the farm? How is your maintenance working? Throughout the course of the last year and a half, we've been fortunate to have a number of really great conversations with a number of really great clients and insureds who have said, I have my electrician here. They're here every year. They're here every 8 months, whatever that looks like. That's not always captured inside farm insurance documents or an application form, but making sure that the insurer is aware of how your farm is different, the things you do to manage it. What's your best practices when you bring the combine in after a day in the fall? What do you do with the baler? Are you spraying that off? Are you cleaning it out? Walk me through that. Providing that information, sometimes it can assist with premiums, sometimes it doesn't, but it helps give an example of what the farm is and what the farmer is doing to proactively manage their risk. The other big one with the reviews and the support that comes to the clients is it allows you to understand your policy. It allows you to make better decisions for not only just, I want to be very clear, not just your premiums, but also understanding what coverages I have, and maybe you want more or less, but you can make a more informed decision to base that choice around. You can have more information that your insurance professional will be able to tell you, yes, this is covered. You'd be able to bounce hypotheticals off. Well, how should I do this? What should I be doing with this coverage? Should I be buying this coverage? Should I be upgrading it, downgrading it? Whatever that conversation looks like, there's an opportunity there to discuss, improvements, changes, premium relief. There could be corresponding premium increases, but at least you're making a decision based on the knowledge or conditions that may apply to your farm. Going back and just reiterating that review process, having that conversation and having that conversation with a professional who understands you, your family, and the business that you're undertaking, very important. So if you aren't doing that review process today, I'd encourage that process to begin, and that can start with a 10-minute conversation to book that review, to have your insurance professional come out to the farm and walk around and ask questions. Is this covered? Do we have this insured properly? Hey, I bought a new combine, or we've added headcount to the herd. We've seen the cost go up for grain bins or silos or whatever other things are going on the farm. Let's you and your professional to walk through that, have those conversations. Hey, this isn't on the policy. When did you build this, or when did you add it? When did you buy that? Those questions are pertinent, and they're going to allow that policy to respond in the time you need it to respond most. Some of the trends we're seeing, we talked about COVID and just the challenges. We've seen some deferred maintenance over the course of the last 10 years. It's happened, folks. What's resulted from that is the challenge of profitability across the province. So it's not Northern Ontario is probably seeing it a little bit more challenging, just with I would say the lack of providers up north. But we see, if you Google large barn loss Ontario, there will be 7 or 8 from the last 4 or 5 months. Like you'll see a horse barn, you'll see a hog operation, you'll see a dairy fire, you'll see an old hay barn. We've seen some collapse of buildings. We've seen some collapse of coverall structures. Those, the 10-foot half high wall rebar with plastic covering steel frame arch interior, they've collapsed. Is that covered? The answer is I don't know. It depends on your policy, but we've seen those losses and they've increased. The frequency, Mark mentioned the frequency, the amount of time something happens, we've seen them increase over the course of the last 3 years. The fires are particularly concerning because it's very difficult for an insurance company to price for a $2 million shock loss, or 3 or 4 barns collapsing. Climate change has occurred. We've seen increased weather storm events, so wind, particularly in Ontario. We had the Ottawa tornadoes. We've had tornadoes in the Barrie area, Goderich for those of you out in the southwestern area of the province. But it's not usual in the Windsor corridor to see major wind come through there. That results in loss. Sometimes those losses are 10,000, sometimes they're 180,000. But they're resulting in increased costs to the rest of the insureds inside that insurance company. So whether it's with the cooperators or another local mutual or another large insurance provider in the province of Ontario, we have seen those claims costs build up. We've seen the large losses continue. The technology and the overall expenditure that goes into these operations is astounding. It's the technology that's being used today is unlike anything we've ever seen. That'll continue to evolve as agriculture continues to pace a lot of these improvements we make in our daily lives in the suburban environments. Those costs go up. The cost to replace relay robots will go up because they're difficult to get. The cost to replace, I know one right now is the John Deere, the globes for the GPS systems. They cost more. It's hard to find chips. It's hard to get them. So those prices have gone up. Those are what's driving a lot of these I'll call it increased premiums to cover the increased expenses that come with a loss. Mark mentioned some of the claims decisions. It's very important to work alongside that professional to understand, I'd say, to be educated and make a decision based on the best information you can have at any given time. So when you're looking at making a claim, is this the right claim to make? Everybody has a financial situation. Everybody has a unique requirement for their insurance. What's challenging now in this marketplace is that given the frequency increasing along with the severity, farm insurance companies they seem to be making decisions based on that claims factor. So you see that claim for $3,000 doesn't make sense. Maybe, and I don't want to say no, but maybe not. Have that conversation, understand what the outcomes of that could be. You've had 30 years claims free. Okay, maybe that makes sense. But you've had 4 or 5 smaller claims in the last 3 or 4 years. Have a conversation with your claims professional, or not your claims professional, sorry, your insurance professional, and understand what that decision might lead to. I think that's a big challenge that we've seen in the marketplace for sure. And as Mark mentioned, just the fewer insurance options due to the market cycle, we are seeing a trend just in general with a lack of understanding about how Canadian agriculture works. Understanding the risks, the exposures we're seeing in the insurance place as well. Just we're starting to reach that age, that demographic where professionals are retiring. We're losing not not as much knowledge right away, but we are losing knowledge. We're losing trusted professionals who have been doing, providing insurance to clients or insureds for 20, 30, sometimes 50 years. There's not an influx of farm kids or previous farm residing people to take up those opportunities. With the challenges that we've seen in the market, it is a challenging time to understand agriculture, and we've seen that reflected in the options that exist for insurance as well as coverage, and then at the challenge with cost that does sometimes come alongside some of those accounts. We've spoken here, folks, about a number of higher level things. We can appreciate that that's more technical insurance component as to the why, the trends, what's going on. We did want to allow as much time as we could while educating some of the membership on the insurance background here, but we wanted to open the floor for questions and ask those questions of the group. What do you want us to ask? What do you want us to talk about? So we'll open up the floor for that, and I'll ask Ben if he wants to start providing questions. We can look to answer those.
Sure. Thanks, Ben and Mark. That was fantastic. So I'll roll through the questions that we're receiving here. I'm actually going to start with a few, actually several that are coming to me via email first. So let me, okay, some of these I'm reading live for the first time, so I hope they're appropriate. Okay, this email question came in on the issue of agritourism farms where the public is invited to the farm. There's a comment that there seems to be a lack of appetite from to cover the liability of those exposure. Just wondering if either Ben and Mark, or if either you could speak to the insurance requirements for liability exposure on these type of operations.
I think
I could start off. Okay, go ahead, Ben. No, go ahead.
It's a fair question. It's something that we see quite a bit as farmers look to diversify their revenue streams. I mean, like any business, it's an opportunity to acquire more money to enhance your business or to get more people interested in what else, right? The other products or services that the farm is providing. There is sometimes the need to look. We for a long time we saw goat yoga, and unfortunately that sort of participation with animals in a physical environment the market wasn't responding well. It still isn't for the example of goat yoga in Ontario. We've seen a little bit of movement. The example is petting zoos that we've seen challenges with. Generally petting zoos. So when looking at what can I do, having waivers is beneficial. Having, who's your target client here? Because if it's a 5-year-old kid and you have let's say goats, and goats generally for the most part are harmless, but if you're a farm located on the edge of the GTA and you have somebody who's never been around an animal before and the goat bucks or kicks, or goats they're funny animals, they'll jump off a hay bale and lands on a kid, what happens? Trying to limit that exposure to harm or perceived harm, right? We live in a very litigious society in the province of Ontario. We've seen the increase in liability claims. There's an opportunity there. It's generally by utilizing another policy, a commercial policy, through a specialized or niche market, depending on size and volume. I'll let Mark speak to some of the underwriting attributes. There are options out there. There are a lot more options, I would say, today than there were probably 2 or 3 years ago, but it does take some investigative work and some work to find out what's happening, what's the scope of this, who's involved, how often, how much money, just assessing that. But I'll let Mark elaborate.
Yeah, Nat, it's you're right, Ben. It's the liability exposure that concerned about, and with animals. So with animals, it can be a challenge. So right, how are we interacting with the animals? Are we allowed to go in with them, or are we just through a fence? What are the size of the animals? A lot of insurers are nervous on horses. Most of them have seen some large horse claims where somebody is being kicked, and you come up behind a horse and it kicks you. Like certainly you can get serious injury, if not a fatality from that. So there is some concerns on that. If it's a corn maze, those kind of elements where it's not animals, it's a little different exposure. You do have obviously a lot of people on the premises, and they may want to know how far do they have free reign to almost all the farm, or are you isolating it to this particular element of the farm itself, or the exposure? How much, what can they get themselves into trouble in? Basically, it's on the farm. So think about that. Is it animals? Okay, so then you think, okay, do I need the animals as part of this? Could I reduce it by having smaller animals? And can I isolate the participants or the public to just this part of the farm and away from other parts where they may get into trouble, that kind of stuff? So that would be some of the things to think about. It may require, depending on the exposure which you have, as Ben said, it may require a different type, like a more commercial related policy.
Okay, thank you guys. That's great. Thank you for the detailed answer. Next question. When renewing farm insurance, if we have a low claims frequency and loss ratios, how is this taken into account when renewing our insurance? Is it taken into account, or is it purely based on general market conditions?
Okay, so I can talk. So what we do is we look at the general market conditions. So we'd be looking at, what type of operation it is that you're running. So what kind of farm? As you can imagine, probably a strawberry farm is going to be different than, say, a dairy farm. So we look at those, the attributes of the farm itself, how much premium we're going to need to pay off the claims, the expected claims for that type of operation. But then the premiums really then gets tailored down to the individual themselves. We look at the individual attributes. So a low frequency, low severity claims, then that's going to provide a lower premium. So what we have is, the reality is we have all these mathematicians behind the scenes for us calculating on this. We're in the probabilities business. So we're looking at the probabilities and what's going to happen. So if we see somebody who's been doing a long time, they haven't had claims, that's going to reduce your overall premium compared to, maybe you've got the neighbor or the guy down the, down the road who's, we all know about, who's had the 5 or 6 claims. That's going to impact their they're going to have higher premium for sure for that. So it'll be a number of factors. You can't just say I've had no claims, so why's my premium higher than somebody else? But there's so many factors that come into it. That's one of the attributes that we use for that. But certainly lower claims leads to lower premium for sure.
Okay, that's great. Thank you. The next question is about cannabis production, outdoor cannabis. So there's the question at the end of the comment here is, so they're mentioning that they couldn't get insurance for outdoor cannabis production from a Canadian company, and had to get insurance from a UK company. So the question is, why do insurance companies in Canada not want to insure farms with outdoor cannabis? We comply with all the Health Canada security regulations, and the product is legal. Any help with this issue would be greatly appreciated. So yeah, if there's any details you guys can provide on the insuring outdoor cannabis production.
Yeah, the market's responded. It's a new market to Canada in terms of production. It's something that insurance companies, I'd say, are more calculated in the risks that we can and can't take. We are regulated as a provider of insurance at a national and a provincial level to make sure that we meet certain tests of capacity and capital requirements to pay claims. With cannabis, it's such a unique it's such a unique risk exposure that we don't fully comprehend at a national level. So we haven't seen the participation from Canadian insurers. You know, is it the next asbestos claim? I don't think it is, but we don't know. Could it be referenced? You know, and all of these are just generic comments, folks. They're not indicative of the organization's values or statements of that. But is it the next tobacco? Is the next cigarettes? We don't know because we don't have enough historical information on what has happened or what hasn't happened. And that's why you're seeing some of the more niche international players participate. So I'm assuming that the provider that the question is alluding to is Lloyd's of London, who are the original insurance bodies globally. Like they are the first known providers of a legal insurance policy in the 1600s in the United Kingdom. They have a little bit different appetite. As Mark mentioned, some companies have a higher risk appetite. They have different requirements, different obligations. At the Canadian insurance level, it's one of those. It's a niche product. It's a niche market. It's a market very much in its infancy that we are monitoring as an insurance industry to see how we can facilitate. It's not the industry's desire to not be able to facilitate new business opportunities for Canadians. Just it's a risk profile that we unfortunately don't have enough information on at this time.
Okay, thank you. So now I'm getting to the questions officially from the questions box here. So the first one there is, do you need to insure a rented farm?
The answer, yeah. The answer if that would be yes. So you're renting from somebody else. I guess it depends on what kind of lease agreements you have with the owner, who's responsible for the insurance. You want to determine that. Is it the owner who's got the insurance on the structures, or is it yourself? The other aspect is you're going to want liability coverage. So liability would cover you for your, we call your personal actions. So to do on that. So let's say, I don't know, you leave a ladder on the ground and somebody comes along and trips on that ladder and breaks their arm. Somebody's going to come after you from a legal aspect on there for, what do they call it, for negligence or liability for that. So you definitely need liability coverage. You may or may not need coverage for the structures, the building. You may have your own contents, for example, whether it's in your dwelling or whatever equipment you have. So you may need coverage for that. So it kind of depends, but at minimum, you would need liability. Liability coverage tends to, depending on the operation, that's probably not too expensive. However, liability claims can be very expensive.
Okay. Thank you. Okay, the next one we have here is why is cooperators wanting electrical inspections for farms? What is the required inspection? Farm or house? And then they add a comment, I cannot get an electrician to do it because of the liability for the electrician. They won't sign it. They ask then, why doesn't cooperators come to the farm and inspect the material?
It's so the reason for the ask is that, as per MAFRA did a study here in 2019. It is believed that 40 to 60% of all barn fires in the province of Ontario were driven by electrical, whether it's electrical malfunction, well, it's electrical error, issue, challenge, deterioration. The fires, the large losses that we've seen in the province of Ontario over the last 10 or 11 years now have been, I would say the majority of them are due to electrical. In terms of an electrician signing off on those forms, we've heard that challenge before. I think at the industry level, we've heard the electrician say, well, I'm only looking at it. They're not ripping apart the walls, not going into the conduit or the cabling or whatever that is. It's to understand that an inspection has been completed and that any updates have been changed. So I'd encourage that conversation to return to the insurance professional and have that conversation, and we can review that at a case-by-case basis. But those electrical inspections are really good at identifying, examples are panel deterioration, overhead lights that have, we've seen some challenges with those overhead lights that don't have casing or don't have protection from collision or things of that nature. So the inspections are important to ensure that we understand the risk profile, we understand the electrical exposures that may or may not exist, and can help facilitate a conversation to either improve it or ensure for that.
Okay, great.
Yeah, I'm just gonna add on. Electrical is a big factor, especially in a livestock environment. So we're talking about usually a wet environment. The ammonia and the moisture in there is very corrosive to electrical systems. So depending on your insurer, some of them may give lower premium or discount on that, depending on when the electrical system was done. Certainly most will they look at the age of the electrical system for when calculating out the premium. The other factor that some people use is even on, say, your iPhone, you can buy little infrared cameras to put your iPhone. I think, they're like $150 or something. You can even go to your electrical panel and point at the electrical panel. The infrared will show you if you've got heat spots on the electrical panel. And if you do, I would say, okay, why don't you bring in your electrician to look at that panel, because you see some a particular breaker's got a heat spot on there, and that could obviously help reduce that fire. Some companies now, there's companies out there that looking at, you can hook devices to your electrical system so they can tell whether there's basically electrical leakage to do on there. And if you get electrical leakage, it can be a problem, obviously, from electrical side and lead to fires on there. So there are companies, and they're getting big into the agricultural business out there for that, to help reduce those electrical fires. And often those devices will be put in and give a reduction to your premiums as well.
Okay, great, thank you. I just lost it right here. So the next question that came up was, when a farm insurance broker company is doing a farm visit, is it typical or protocol to ask for permission to take photographs?
Yeah, well, I would say that they should be asking for their photographs. They may want photographs. The underwriter may want to have some photographs to look at condition, those kind of things, what the, whether it's the premises or something like that. It looks like the good photographs will make the a renewal a lot easier. Let's put it that way.
It's very much part of the application process as well. Now, just with the, technology is ever improving, and the ability to acquire information and review, it's an efficiency, right? If the industry had to send out an underwriter to go and see every single farm in real time before they provided a quote, an already cumbersome process becomes even more cumbersome, becomes even longer to renew a policy, to obtain a new quote. So some of the enhancements now have been through technology and the use of smartphones or iPads or whatever piece of technology your broker is bringing out. It would be, I think it's in everybody's best interest to be above board and ask those questions for photos, and whatever that conversation looks like. I would encourage you to have it with your insurance professional, understand if photos are going to be taken today and what photos do you need, those types of things. Just understand, but they are fairly commonplace in the industry now to provide that viewpoint for, as Mark mentioned, good pictures. The better the pictures, the better the understanding of the risk, the better the understanding of the protections needed, the pricing needed and or not needed. So the photos have become, I don't want to say mandatory, because that's not always the case, but definitely on new business for farm insurance, from what I've seen, very, very much commonplace within the industry, for sure.
Okay, that's great to know. Next question is, do insurance companies share individual claims history with each other?
There is a software. So there is a software that some companies subscribe to, where we can pull existing loss history. In the province of Ontario, the mutual, in Ontario, we are fortunate to have such a large number of participants. My last count was 46 mutual participants alongside the cooperators in the Ontario insurance market. For the most part, they don't subscribe to that system. So information about previous losses would be required or requested at the time of whether that's a new quote. You're looking to have that conversation about perhaps changing providers. Generally, that information needs to be provided so that the insurance company who is now taking the risk can make an informed decision. But in terms of a company turning to another company and saying, "Hey, I need that," that doesn't happen without explicit permission from the client and or the client to their provider.
Okay. Great. The next question there is if there's kind of the top things farmers should be aware of regarding liability issues when someone enters a farm property.
Different levels. Are we talking about trespassing and NBT? Do you want me to break down both?
It's very, it's not specified, so maybe whichever you think is perhaps more common or pressing for a farmer.
So I'll go at it from two perspectives, folks. The perspective is where you're choosing to engage people in business activities on your premises. Those people are owed the highest duty of care. So that's why you see insurance companies ask for signs, for waivers, for those little yellow signs that exist in retail locations that every trip's over going through the door because the floor's still wet. Those are usually requested by the insurance company to stop some of the liability exposures that happen. In Ontario, we've seen a large increase in on-premises liability claims. It's become the new auto accident. Oh, I slipped and fell. Okay, where, when? Well, up until a couple months ago, with the new advent of Bill 118 out of Oro Medonte for the snow removal stuff, we're seeing slip and fall claims up to 24 months old. Did the client have, does our insured have any idea who this person was that visited perhaps 2 seasons ago, 3 seasons ago? The answer is generally no, and then that person gets dragged into a lawsuit. So when you are having people on your premises or at your operations, very important to set the highest barometer of protection for them. So whether that's having a waiver or if you're doing a farm tour, walking people through, don't touch this, don't smoke there, don't go over that fence, don't walk up behind a horse, things like that, where some of the ones I've seen are folks who have never been around a farm, and that's okay. We want to encourage that in safe settings. Other ones are retail operations on the farm. Somebody comes into your store, it's, if you're in Clarington here in the last month and a half, it seems like it snowed every day. There's probably an accumulation of wet, slippery, whatever it is at your front entrance. If they slip and fall, you're responsible. You're going to be responsible. So having some of that risk management planning up front and working alongside a professional to set up those signs or whatever. The other one, and the one where I think I'm going with this, is the trespass circumstance. We've seen people come on premises, whether it's to protest Canadian agricultural practices or they, for whatever reason, your liability still does respond to those instances. They are still owed a duty of care. It is less than those who you invite onto your premises, but there are still the exposures where people could slip and fall going through a barn door. They could slip and fall going over the fence. I mean, there's that question of, well, whose fault is that? At the end of the day, as a provider of insurance, it's our responsibility to protect you from those lawsuits. So the liability component does extend, and we have seen claims from both trespassing and that on-premises invitee type situation where somebody comes to do business. So I hope that answers the question. Is there any further clarification? Happy to review that.
Okay, great, thanks. The next one is, what minimum coverages would you recommend for a property that is rented to adjacent farmers and has no structures on the property?
It's a very specific question, so I'll answer it very broadly. My recommendation my minimum recommendation for all clients in the province of Ontario, whether you're a client of the cooperators or any other insurance provider, is that you assess what your exposure is as a farmer and understand that it's likely not enough. So my recommendation for anybody I talk to passing on the street, friends or family, $5 million is where you should be starting that conversation. $5 million, people go, well, that's a lot of money. It is, and it's not. In the event that somebody is, I want to say, catastrophically injured, the cost to rehabilitate and or provide support for that individual over the course of the remaining lifespan that they have is exponential. It is extremely expensive for people who get injured on farms. We see it all the time. Somebody loses their hand, somebody falls off a silo, somebody got hit with a car, snowmobile accident. Things happen is where I'll go with this. It's important to understand that things can and will go wrong. Farming is still one of the most dangerous occupations in the world. I recommend carry as much as you're comfortable with, but at the end of the day, understand that it does seem to go up every year in terms of damages, injury, cost to rehabilitate. Have that conversation with your insurance professional. If the option's available to go more, go more. The cost is not linear. It's not, oh, if I double my liability limit, my price doubles. That's not the case. At least from what I've seen in the industry, it's not, I pay $300 for my liability premium today, I want double the coverage, it's gonna go to $600. That is not what I see. It's usually a nominal increase, but in the province of Ontario, I think it's very important that farmers assess what the exposure is to their farm, their family, and their operations. And when we start talking about net worth of Ontario farmers, the cost of land prices, the cost of everything, that net worth conversation starts to move up the exposure. What assets can they get? What can they come for? Injuries, things like that, and the cost of them. I would encourage everybody to review those limits with your insurance professional.
Excellent. Next question is, if a farmer reports damage to a building due to an insured peril, but then chooses to pay for that damage themselves, does that factor into their frequency regarding kind of, I assume, for future premium costs?
I can answer that. Yeah, I guess the best is maybe talk to your broker, your insurance professional on that. I think most insurers would have on there, they would not classify that as a claim to do on there. But it's best to probably talk to your broker. Not all insurers treat that the same for that. Yeah, so I guess I'll leave it at that.
That's great, and we're very nearing the end here at 1 o'clock, and we're definitely not going to get through all the. There's a lot of questions here. Perhaps Ben and Mark, if it's okay, I'll follow up with you with some written questions of the ones that we don't get to, if that's okay with you guys.
Sure,
of course.
Okay, great. So we'll try to fire through a last couple here before we hit 1. The next question is about what the future for insuring oil heatings in the homes regarding tanks and tank updates. If there's any thoughts about what the future holds for insuring oil heating.
I would say insurers are they want depending on the tank, double walled and all that kind of stuff. They certainly want them replaced on there, and they're sort of demanding to be replaced. Whether the tank is inside or outside, those claims are very expensive. I've certainly seen claims where the tank has gone in the house, and quite frankly, the house is it's a write-off to do on there. So the very expensive claims, those oil tank claims. So yes, they'll continue to insure them, but they are expensive, and there will be some requirements on updating the tanks on there. Some of them may want some sort of barrier around the tank in case it does leak, that kind of stuff.
Okay, great. See here, I just lost my place here. Bear with me one moment. Should larger farm policies be in the industrial insurance pool? That's the next question.
It's an interesting question. It comes up frequently. Based on what we see, they're farm operations, right? Like they come back to what is your primary function? It's to raise livestock and grow crops. That's historically always fallen under the farm insurance banner. Some companies, whether they split them out into a manufacturing bucket or however they want to maneuver it, they are still going to come back to the operation type, which is raising livestock or growing of crops. And that's gonna be the definition, whether you put a commercial title on it or a farm title. Those operations will generally fall inside that production of food and or animals.
Okay. And 1259, so I'll make this the final question, is can a removal of old fence lines, wire posts, etc., can that lower your liability risk? They're asking specifically about, snowmobile lawsuits, etc. And if so, would that lead to lower premiums on insurance?
Yeah, so it's complex because we get there. So you'll lose the wire fence. Unfortunately, then if a cow walks out onto the road and a car hits it, there's liability that way as well. I would say for the most part that removal of the wire fence probably will not reduce the premium, or certainly not that much. The liability usually is not the significant part of your policy unless you're some sort of more specialized type risk or you have a agritourism type business.
Okay, great. And that takes us to 1 o'clock. So Ben and Mark, thank you so much for your time. Apologies to those we didn't get time to get to your questions. We have a tremendous amount of questions in here. It's great to see the involvement on this issue. I see a question here at the end. If our question wasn't answered, who do we send it to? So I'll follow up with Ben and Mark. I've taken note of all of the questions here in the chat box, and I'll follow up with him one-on-one, and then I'll talk with our communications team about how we will distribute these questions, but we will continue to look into it. If you had a question that you didn't ask or you think of later, you can send it to me and I'll follow up with Ben and Mark. So ben.laforte@ofa.on.ca. So yeah, see there, can you confirm we got your question? We have all the questions in this box. We haven't got to them all, but we will follow up. So thank you again, Ben and Mark, and thank you for everyone for participating. And we will follow up in our newsletter, members newsletter, with additional information about what was on this webinar and the questions we didn't get to. So thanks everyone, and that is all we have for today.
Okay, thanks for inviting us. Appreciate it.
Thank you.
Happy to be here. Thanks for attending, everybody. Appreciate it and everything you do for us.